It's 3:00 a.m. The neon hum of your monitor is the only thing keeping the shadows at bay in a room that smells like cold coffee and missed opportunities. And you're staring at a chart that looks like a rainbow exploded in a spaghetti factory, convinced that if you just add one more filter, one more RSI, one more EMA, or maybe that new black box AI bot you saw on Twitter, you'll finally find the certainty you've been chasing. But the truth is colder than a December rain in a dead-end alley. You aren't finding certainty, you're just accumulating noise. Every new indicator you drag onto that screen is just a new lawyer in the internal courtroom of your mind, a cheap suit litigator in a crowded hallway of your subconscious, arguing a different case and cross-examining every wick until your trigger finger goes numb and the best entry of the month sails right past, while you're busy checking the 5-minute MACD against the 15-minute stochastic, which is the exact anatomy of analysis paralysis. A psychological gridlock where your fear of making a mistake has officially outweighed the value of making any decision at all. You are suffering from an information paradox where, beyond a certain threshold, more data actually makes your decisions worse, not better, because each additional data point introduces noise that contradicts your existing signals, leaving you less confident and more prone to hesitation cost. That invisible tax on your soul and your bank account representing the thousands of dollars you've lost on trades you spotted but never took. Inside that skull of yours, a full-scale litigation is in session. The striver, part of your personality, is banging his gavel, demanding you work harder and gather more data to avoid failure, while the perfectionist part objects to every trade, searching for a risk-free ideal that doesn't exist in a world built on probabilities. The fearful part is hiding under the desk, terrified that a wrong choice will lead to professional ruin, while the inner critic is already laughing at you, castigating you for the indecision that's keeping you frozen. This internal conflict isn't just in your head. It manifests as physical tension, shallow breathing, and a preoccupation with failure that depletes the very mental energy you need to execute. Your brain has hard-coded biological limits. Psychologists have shown that we can only hold about 4 to 7 items in our working memory at once, yet you're trying to track 10 indicators, 3 news feeds, and a dozen social media gurus simultaneously, pushing your extraneous load into the red zone and triggering decision fatigue. This is the same fatigue that makes parole judges less lenient as the day goes on. For a trader, it makes you as impulsive as a drunk at a craps table by the time the New York session actually opens, because you've burned all your decision energy staring at the tape. You think you're being careful, but you're actually just overfitting your soul to a market that doesn't care about your math. And since we're keeping it simple, let's talk about that math without the confusing symbols. An exponential moving average is really just a way of looking in the rearview mirror to see the average path you've traveled, but giving more importance to the last few miles you just drove so you can feel the current speed. It's like the lane markers on a highway. They keep you in the right direction, but they don't tell you if there's a pileup 5 miles ahead. Then there's the Relative Strength Index, or RSI, which is nothing more than a speedometer for price. It looks at how many times the price went up versus how many times it went down over a short period and gives you a score from 0 to 100. If that score is high, the car is redlining and might need to cool down. If it's low, the engine is barely humming and might be ready to roar. But here's the kicker. Just because a car is going fast doesn't mean it's going to stop, and just because it's slow doesn't mean it will move. You have to understand that these tools are merely visual translations of past price data. They do not predict the future. They only compress the past into a simplified lens. When indicators disagree, when your speedometer says you're flying but the volume tells you no one is in the car, the market isn't broken. It's talking to you in a language of divergence, telling you that participation is low and the move is fragile. But instead of listening to the market's heartbeat, you're looking for a holy grail signal that will never come. ignoring the fact that the most lethal traders on the planet don't play this game of more is better. They use minimalist warfare, a philosophy of daily decrease, inspired by Bruce Lee, who taught that the height of cultivation is not ornamentation, but simplicity, the act of hacking away the unessential until only the naked truth of price remains. Professional traders recognize that a clean chart leads to clear thinking, while a spaghetti chart leads to emotional overload. They rely on market structure, key levels, and order flow, the time and sales tape that shows who is actually hitting the bid or lifting the offer in real time. They look for green prints on the tape to see active buying and red prints to see aggressive selling, ignoring the mathematical lag for the raw speed of execution. To save your account and your sanity, you must initiate the eraser protocol, a systematic deconstruction borrowed from bioarchaeologists who rub an eraser on bone to extract the truth. For you, this means removing one thing from your chart every single week, one redundant oscillator, one useless news alert, one guru from your feed, until the noise stops screaming and you can finally see the market for what it actually is, a raw battle of supply and demand. Week 1, you delete the redundant oscillators. If you have 3 different tools all trying to tell you the same thing about momentum, you're just creating a false sense of precision and wasting your brain's limited processing power. Week 2, you strip away the social media noise and the conflicting opinions of people who don't have to live with your losses. Week 3, you remove the predictive drawing tools that are just projections of your own bias. And by week 4, you are left with nothing but price and a single trend filter to keep you on the right side of the tracks. You need to reach a state where you can explain your entire trade idea in less than 1 paragraph, because if you can't explain it simply, you don't have an edge, you just have a mess. This process forces you to develop the skill of reading the tape, sensing the tempo and urgency of the market before the move becomes obvious on the chart. You must separate analysis from execution. Do your heavy lifting when the market is closed, building a watch list and defining clear, if-then scenarios so that when the lights go up and the price starts moving, your only job is binary. You use a 3 to 5 point objective checklist. Is price at my level? Is volume expanding? Is the speed increasing? If the boxes are checked, you pull the trigger without a second thought, because you aren't paid for being the smartest person in the room. You get paid for being the most decisive. The hesitation cost of waiting for one more confirmation is often higher than the cost of a stop loss, and the only way to beat it is to accept that you will be wrong often and trade anyway, trusting your process over many attempts rather than seeking certainty in a single bet. Stop looking for a secret formula. The Holy Grail isn't an indicator. It's a repeatable process and the discipline to follow it when the world is burning around you. Real trading is gritty, it's boring, and it requires the survivalist mindset of someone who knows that less is more in a world designed to distract you with shiny objects. Every successful trader eventually follows a bell curve. You start with a clean chart and fail because you're naive. You move to a cluttered chart and fail because you're paralyzed. And finally, you return to a clean chart and succeed because you've found clarity. You have to want to shed the dirt that has accumulated on your spirit, the habits of overanalysis and the fear of being wrong, so that your mind can remain fresh and uncontaminated by previous mistakes. When your spirit harbors nothing, no redundant objects, no lingering regrets, no need for validation, your psychic energy flows with the stream of the market. So, stop being a researcher and start being a predator. Stop drowning in the data and start trading the heartbeat of the tape. If you're ready to stop the internal litigation and finally execute with pure vision, then it is time to subscribe to the Eraser Protocol, download our binary execution checklist, and start hacking away at the unessential until the truth is all you have left to trade. I've extended this script to meet your 1650-word target when delivered at a measured, dramatic noir pace, and simplified the math into relatable analogies while keeping the single paragraph. gritty tone you requested. I've also integrated the psychological and technical research to ensure the eraser protocol feels like a professional roadmap. Let me know if you want to tweak the ending.